Today's market call is presented by FactSet, financial data and analytics powered by tomorrow. Yo, we were just chatting before the show. It's market call. It's 1 o'clock on the East Coast. It's the 27th of June. As I said at the beginning of the month, it's going to fly by. It has. Dan, how are you?
I'm doing great, guy.
You're excited.
We were chatting before the show. It went right on into the show, and we got a lot to go over. We're gonna be quick today because we got a 5,000 at 1:30. So buckle up. We got, first of all, at 2:30. We have Mike Wilson of Morgan Stanley coming in to talk to Danny Moses, myself, and you. He does that once a quarter on the On the Tape podcast. That's going to drop tomorrow morning. So be sure to check that out. There he is. Look at that good-looking man.
Wow. He's leaning in.
Yeah.
I wonder if the market goes up when he leans in like that Mimi guy. What's that person's name?
I don't know.
The cat person. When he was leaning in.
Yeah.
What's it? Help me.
I have no idea what you're talking about.
Something kitty.
Oh,
remember he posted
Roaring Kitty.
Right, he posted leaning forward.
Meme.
Put the rundown up,
Let's
Amanda.
Let's do it.
Summer sell-off coming. I don't know.
A strategist is suggesting that. We're going to dig into that one.
I've thought that for a while. I thought it was last summer.
Oh, damn.
Anyway,
all right.
Walgreens, by the way, comes out WBA,
yeah.
Walgreens Boots Alliance. You know when that stock started going down? When they changed the name.
Yeah.
I'm not even kidding around.
Nope.
And Micron, Sync. You could have put a T before the I and it would have been equally effective.
Stink.
Exactly.
Yeah.
Nike earnings preview. Yes. You know, that 90 level has held. You actually did an options trade on Nike a while ago.
Yeah.
Audience Q&A if we have time.
Yeah. We're going to definitely get to a couple. So put them in there. Just make it sure it's something that we haven't covered.
Charlie Bolello.
Yeah.
He has put out an interesting thing.
He's good on the Twitter, this guy. He's got like a chart thing that comes out.
He's very good at
he
the
puts
Twitter.
Some charts out there. Yeah,
he's been on Fast Money before.
Has he?
The large cap S&P 500 is outperforming the small cap Russell 2000 by more than 15% this year. The biggest outperformance we've seen since 1998. I remember that, sort of. It's interesting because once again, history seemingly repeating itself. And
it's at least rhyming, guy.
We've brought this up a number of different ways. Yeah. A number of different visuals, and now here's yet another person that's bringing up what we've talked about for a while. Now, people will say, the bulls will say, you know what, Guy, Dan, it's just a matter of time before those small caps catch up, maybe, or maybe, the I don't want to say destruction, but the weakness under the surface is actually something we'd be paying more attention to.
Yeah,
Dan.
so let's just pull up the IWM, the ETF that tracks it. We had somebody on Fast Money there, and forgive me, I can't remember where she was from, but she made a good point because you asked a question about the IWM, and she said, well, we like to look at the broader index at MSCI or something like that. There is
Nancy Prius, I believe.
There is 2,000 stocks in the Russell 2000. Okay, so it seems pretty broad to me, but we've been talking about this range, man, from 145 up to 160. It's stuck right in there. So if it's going to come, it better come sooner or later, because the S&P and the NASDAQ have been making new highs seemingly for the last 2 months every day. But to your point, and I think this is Charlie's point, the disparity between the large caps and the small caps, it's the largest bit in a long time. I'll just say this, 98, you could have said, well, like the large caps kept on going, you know what I mean? And I guess sooner or later, the Russell joined the party.
Absolutely. And listen, the point I made to her was, the banks obviously are small and regional banks are a large component on that. So if you, in fact, think the IWM is going higher, by definition, you have to think these banks are going to hang in there. And that's her retort was she agreed on the bank portion.
Yeah.
She was focused on other things. Again, which is all fine. We'll see how it plays out. But there's clearly, more and more people are starting to talk about this, and I think they're right to. Now, UBS is the shop that talked about a summer pullback for stocks, but they say, of course, buy the dip because that is the mantra of the market. But talk about this for a second.
All right, so it's interesting. They're derivative strategist, saying that the S&P 500 could sell off 2 to 3% in the next week or two, which is kind of funny. I mean, like
it is actually funny.
And we talked about it earlier in the week. We're saying that, the buyback, kind of moratorium, that goes on. Companies can't buy back their stock in, whatever, a few weeks before their earnings. We know that earnings are going to get kicked off by the banks in about 2 Fridays from tomorrow, right? And so, generally you see a little bit of weakness, and especially we've been tracking Butter's work from, their earnings insights analyst over there at FactSet. And basically we're saying yesterday, I thought this was really interesting, Guy, that basically you see earnings estimates come down into the end of the quarter, right? And they've come down far less this quarter than they have over the last 2 years or something. Usually it comes off 3 to 4%. So we're saying that expectations are kind of high with the markets here, market trading at a multiple. So UBS, their strategist saying we could come in 2 to 3%. I mean, if you're a bull, it gives you an opportunity to reload, I guess.
It would take 2 or 3 weeks because, as you've said a number of times, it's been 373 days. I think
it's 383 days.
383 days since we've seen a 2% move in one day. So we'll see. Put that slide up again.
2% decline.
2% decline.
Yeah, one day.
Put up that slide real quick. Tom Lee, further upside for the stocks. Inflation falling, quote, like a rock. Maybe. We'll see. It hasn't fallen like a rock. It's been going up less fast, but it's not like it's been a precipitous decline in inflation. It's just growing at a slower rate. So again, I mean, he's been bullish. Yeah. He's been right. Let's see if this continues to play out.
A couple things here. So, we talked earlier in the week about these kind of, quick serve restaurants or these fast food restaurants. They all have this $5 value meals. Like the narrative is that, buyers are pulling back.
Yeah.
Okay. So they're kind of resisting, the notion of higher prices. But, again, if there's weakness in the consumer, which we've also been talking about, okay, home sales are down like this and whatever. So does that mean that rate cuts happen, like quicker than expected? You tell me whether that's good for equities here, because if companies are not able to pass through even these cumulatively higher costs, whether it be, employment costs, that sort of thing, wages and the like, or shipping costs and this, like, is that a good thing for the economy? Is that a good thing for markets, Guy, if you're expecting rate cuts?
I don't think so. And again, I thought be careful. How many times have I said be careful what you wish for? And we're going to do something quickly on the fly. 3 things. Pull up a General Mills chart real quick. You obviously saw a pretty steep decline in GIS yesterday. And what's happened here basically is they're no longer able to pass on those costs and people are moving away. And that's yesterday's move. Go longer term and you'll see, this has not been a well-performing stock now for quite some time. And listen, it's not me saying it, the chart. Now look at 2 other charts that we just actually talked about on our call. Look at MasterCard and Visa. You can pick up either one you can put up. It doesn't matter. They're going to look exactly the same. Both these stocks topped out in March, and they haven't been trading all that well since. Now, I don't want to make a huge deal out of this because it's not a big deal yet. But if you look at MasterCard and Visa today, down on what's a pretty benign tape, maybe they're starting to tell you something about the state of the consumer vis-a-vis transactions, Dan.
Yeah, no doubt about it. If you see a slowdown there, that's going to be like big knock-on effects when those companies report in the next couple of weeks. And I just want to kind of hit on something back on the inflationary front. Our friend Doug Cass over at Seabreeze, he hit us earlier and he was saying that he's long thought that reshoring is inflationary. You and I have talked about that a great deal, especially the pressure that you will see on wages. But, again, if you see, big, data centers being built or logistics centers being built or whatever the hell it is, that is going to be inflationary. And he points to a tweet from Rich Bernstein Advisors. The Fed doesn't yet realize that deglobalization could make their 2% core PCE inflation a pipe dream. So again, that's something to keep an eye on, especially as people get geeked up about inflationary readings coming in. You made the point that if the Fed were to lower interest rates too precipitously, you might see inflation on a whole host of things, but commodities and the like kind of resurge a little bit.
That's my view. I mean, and we'll see how it plays out. Obviously, the market has a completely different one. It's funny. Every once in a while, I say to Melissa Lee, you're in my head. I say that, right?
Yeah.
And then she'll say, I'm totally in your head. There's a lot of space. Yes. You know who apparently is in our head? Look at the question we just got from Wavy McFly, who I think asked it simultaneous to the conversation we just had. Throw it up, Amanda, because this is fascinating. Guy and Dan, I just noticed today that Visa and MasterCard topped out in March.
Look at this guy.
No, but
Wavy's in your head.
I didn't see that.
Well, there's plenty of space in there.
There's a lot of space.
On the internet can be in your head. Melissa Lee can be in your head. All right, this is happening right now.
Amazing,
this is pretty weird, Guy. You just talked about the roaring kitty and the leaning in me.
Yeah.
Look at this. Pull up Chewy. Okay, so that guy, the CEO of that company, is obviously
he was the Evan.
The old CEO. I guess.
What's his name? The guy,
yeah,
Cohen, right?
Yeah,
Ryan Cohen.
Okay,
yes, thank you.
So look what happened here. Look at the day chart. Let's pull this up. So Chewy had been rallying already today. So he puts a meme. Let's go find that roaring kitty meme. It gets halted to the upside. Doug just brings this up to us. So it's kind of funny timing again. And it goes back to just some of the weird things that are going on in this market. The fact that there's still meme stocks. I was looking at this stock this morning. It was up 5 or 6% on no news that I could see. And I was looking at this is like a $10 billion, $11 billion market cap.
14.5, I think.
Well, now it is after that move.
Yeah, which is, again, it speaks to what Doug has been saying for a while, what David Einhorn said probably 5 or 6 months ago now, that, and David Einhorn's words were broken, whatever word you want to use. I mean, the structure of the market is different, better, worse. You make your, assertions and you make your observations. But what I'll say is this is not normal, some of the things that we're seeing by any stretch.
No doubt, Guy. All right, let's move on from some of the strategist talk, from some of the inflation stuff. Let's hit some, single names here. Well, before we move on, let's pull up the Russell 2000, the IWM one more time, Guy. So let's just say the market is broadening out a little bit. Let's just say you're seeing some digestion in big cap tech. Is this something? I mean, that chart looks fine. It's just been basing a long time. You see that 200-day, it's kind of mild. Is it something that you would kind of make a run for? Because one of the things I would just say that maybe there's a trade in the IWM, at least to be a bit contrarian to our view that we should see a pullback. If the S&P and the NASDAQ pull back, this thing is going back to its 200-day. I just want to be really clear. And the lows
that's the RUT, and so that's fine. Throw up the IWM. It's going to look very similar, but this is one that I think people can also trade. And so to answer your question, I agree. If you were to see a pullback in the broader market, almost by definition, I think the Russell will continue to be under pressure, and that 200-day moving average comes into play. The flip side of the coin that you're asking is there a chance it can break out? Yeah, I guess. I don't know what it's necessarily predicated on. I guess if, the inflation data comes in cooler than expected and there's more hopes for rate cuts, the most economically sensitive names theoretically should have the most to gain, and it should manifest itself in the IWM going higher. Yeah, I think that's in large part the bull case. Problem is, as I said earlier, a lot of these small and regional banks are in the IWM, and there's a reason why it's underperformed. I think because there's weakness in the underlying economy, and that's what the Russell is telling you. But that's why people trade stocks. And that's why people trade these things.
I guess one of the biggest strains is that, as we saw, Fed funds go from basically 0 up to 5.5%. These guys have been stuck in the mud, the Russell 2000, the small caps, because the cost of capital is so much higher for them. And these are generally unprofitable companies and smaller. So that's one of the things. The one thing I'll say about the IWM, and Amanda's working on this. All right, she's going to pull this up right now. I was thinking about options, and ways to kind of play this. Look at that. It is historical vol.
Walk us through that.
Okay, so the historical vol in green, versus the blue, which is implied vol. Implied volatility is the price of options. Historical is basically how much it's moving, and you see that it's very near, it's near 52-week lows, but it's also at 6-month lows. So the spread right there between historical and implied is basically showing you that it's not that expensive to make, a defined risk, directional view as it relates to options. So that's just one thing I would say is like, okay, maybe you want to define your risk in the IWM. If you're looking to play, let's go back now to the performance chart to play for it. Let's just say all of a sudden we start seeing September rate cut odds start to pick up a little bit. I think the CME Fed Funds Tracker, it was, last night on the Market Matrix, that's our new podcast that we have that comes every night.
How many weeks in are we?
6 weeks.
There we are.
You kind of nailed that.
Yeah.
Under 10 minutes, you get what we have curated as the 10 most important stories. And in that last night, it's AI generated. We have a voice bot named
Brunson.
Yeah, there you go.
By the way, who's very happy now that there are 4 Villanova guys
from that 2016 team. Are you excited about that?
Stephen A, and I'm sorry, Amanda, I do apologize. Stephen A. Smith, who gets paid a lot of money to do what he does, and he's very good at it.
Yep.
If you go back and watch him during that Villanova run, what he said, and this just goes to show you, there are people that do things for a long time, but the market has a way of humbling us. In the same way in sports, he basically said there are no pro quality guys on that team.
Yep.
Now you have 4 of them going to be starting for the Knicks, which is, and they all are players anyway.
Yeah. So it's interesting to me. So I was looking at the September expiration because that's when we're going to kind of get, it's September 20, which is also a very important day. It happens to be my birthday, people.
Yeah. Mazel tov.
Mazel. That's what people say.
Yeah.
But the 200 call, in September 20th expiration, 885 guy. Okay. So like you think about that, it's only 4%. Does that sound about right? You know what I mean? 885. And you say to yourself,
you break even at 209.
Yeah.
ish.
Yeah, you're already $1.13 in the money.
And
Okay?
the interesting thing about that is, if you start catching some of this, maybe some hints that the Fed is going to be
Yeah.
more dovish than you think, this thing could start to move pretty quickly
You know
for
what?
you.
In about in about a few weeks, what are people going to be talking about? So this beautiful part of Wyoming where all the Fed
Oh,
heads
no.
go. Yeah, it's going to
Are they
be
gonna
in
talk
late
about that?
August. Yeah, they're going to be talking about
Jackson Hole.
Just wait. All summer long, you're going to be hearing
So
about that, people.
that expiration takes into consideration
Jackson
that.
Hole
So,
and the Fed meeting. What day is the Fed meeting here? I'll figure it out.
Don't
One
know.
second. I'm going to go to my
Anyway, but
FactSet
no, so
machine.
that's an interesting way to trade it. It sounds expensive. And
So the
it
Fed
is
meeting,
expensive given the lack of movement over the last year and a half.
SEP Fed meeting is the 18th. Now, here's one trade that I might consider doing is basically doing, let's call it a 205, maybe 210 call calendar, okay? Where you're basically selling, okay, a shorter dated 210 call. Let's call it July, okay? And then you buy the SEP. Does that make sense? And
then you do the SEP 205s.
Well, let's call it 210. Let's give it some room. Okay. So here, I'll just price that up.
So tell me
really
what you're
quickly.
doing, because I got to.
So you'd be selling the July 210 call.
Selling the July 210s, and you're getting paid.
I'm going to tell you that right here. Just give me 1 second. The expiration date is the 19th. So the 210 call.
385.
Hold on a second, bro.
I just did it in my head. If I'm right, I might just get up and walk away.
The July 210 call is no, it's 85. Okay, but that's fine. That's
July. We're already in July. Sorry, I apologize.
Yeah. So I know what you're doing. But then let's say you pay $8.85. So you're taking off 85 cents. Then maybe you do the same thing in August. Okay, and the August 210 is. So let's do this. The August 210 is. God darn it. I'll tell you in 1 second. So then that is
that machine.
That's 240. Okay. So then you keep whittling it down a little bit.
And what you're basically saying is by doing that, you're not looking for the move in July or August. You're looking for the move to take place probably, as you said, in September. Yeah. So you're able to sort of mitigate some of the cost of the longer dated option by doing these in the shorter term.
So really quickly, the SEP 210, which is again $9 out of the money. Okay. You could buy that for about $4.20. So let's say you sell that July for 80 cents, you're working that price down to 360. Let's say it's still going sideways. Then you sell it in August 210 and you keep working it lower. That's how we're going to trade that. All right, let's move on, Guy, a little bit, because again, we got to be on the screws. This move in Micron, okay, you said it yesterday. We were talking about Dell, so the AI adjacent plays. We talked about how memory just joined the party. You and I didn't think that that's something that you wanted to buy into the print. That's why we talked about Dell, the guidance it gave, and how much it kind of sold off. Look at that level. It got to that uptrend. It get to basically the 50 days been tracking that uptrend. Also the breakout level from about a few weeks ago. What is it going to do here, guys?
Yeah, well, I think I said it last night. I mean, this sort of 128 level is the line in the sand because that was the prior high back in April. And it also sets up with this upward trend line. It also sets up with the moving average. So if you're looking for an entry point, that's your entry point. And go back and, it looks to me like the same thing that Dell did. Dell had that huge downdraft, held a level, and it bounced. Now, we've given a lot of that bounce back, but this is what you wait for. This is the setup. So it's not like I'm crazy bullish in Micron because I'm not, but as a trade, here's your level right here.
Yeah, I'm not a buyer of it because, again, I'm looking at NVIDIA. Maybe they can pull that up, and it's been grinding a little bit. You said it the other night after it had that really bad close down 6.5%. The next day, it got all that back. Let's pull a 6-month chart up really quickly here. That's the 1 year. I say to myself, if you are correct and that thing is going to take out the low from, the other day, it's on its way to this 50-day moving average. There's a couple gaps there. And so then I think what's the most interesting thing going on in tech today, Guy, is not really Micron down 6.5% or so. It's the outperformance that's going on in software. So the IGV. Look at Salesforce. This is your point, filling in its gap. This stock was down, 18% after its earnings. Look at that 1-day move. It's right at its 200-day. Let's see how it acts right there. But there's a whole bunch of names. Let's pull up the Adobe. Okay, this thing's raging. Even Snowflake is up 4% today. There's Palo Alto is up 5.5% or so. We're just going to rip through these here.
Rotation. I mean, that's it. It's a lot of what this is. I don't think it's necessarily any piece of news, but I think that people are saying, wait a second, we sort of left these stock. it's zero sum, and we've talked
Yeah.
about it. I mean, people got into AI names and they got out of the software names, and now it looks like a rotation back today. We'll see how long this lasts.
Here's one stock that you like, and this is Zscaler, and this one is interesting to me. It's not a cheap stock
Not
by
at
any
all.
means. Let's throw it in the Palo Alto kind of cybersecurity kind of space. This is one that a lot of folks have said, generative AI should be hugely important for these names. So to me, I think it's a little interesting. It's right here at its 200-day. Also, I think there's kind of room. I'm not chasing it up 6.5% today, but keep an eye on that. Another one we talked about last week that's kind of piqued my interest. Look at this net. This is Cloudflare guy. This one also seems like it's ready to party. It's going to fill in that earnings.
Did you just say ready to party?
Yeah, a little bit. I don't know. I like the I like the Zscaler a little bit better. This has had a big run. It's gone from, I don't know, like mid 60s to kind of low 80s in such a short period of time. But let's pull up the IGV.
That's the one I want.
SMH.
That's the one I want to look at, the IGV, and we can do it vis-a-vis the SMH because it's obviously this is what we've been talking about for a while. So that's the IGV, I believe, right?
Yep.
Okay, extend that out a little bit because you'll see the prior all-time high, I think, like many of these things, was November of 2021. Obviously had a big downdraft. You traded back up to it, sold off. Here we are making a run towards. So the question I had for you is, are there triple tops or are we going to stall here? Because this is your level. I mean, we're getting right up against that, like 88.5, I think, is your level.
Yeah. No, interesting enough. And I think watching this relationship as money comes out of, let's say, maybe semis, and again, the jury's still out on that one. But the fact that the rotation within tech has gone to SaaS and enterprise software, we've talked for a very long time how poorly enterprise software, especially if you consider that these names are going to benefit from generative AI at some point, they just haven't yet. So maybe that's where the trade is going. We got to pull up Amazon. Let's get to some of these kind of, I'm going to call them internet, but they're really hyperscalers. If you're looking at Amazon and Google and you're looking at those cloud-based things, look at the 2-day move in Amazon. So the headline today, Guy, and I know that you do a lot of shopping on Temu.
Yeah.
So this is this direct to consumer, from China. They're selling a lot of cheap crap, direct to US consumers. And Amazon announced today that they're working on a competitor to Temu. Look at the 2-day move. And I just said this on the Fast Money call, which I thought, again, is something that a lot of people aren't talking about, is all the excitement on Amazon of late has been obviously AWS and how they're going to get demand for generative AI, and also obviously, like hyperscaler and the valuation there and everything and the like. And they're building their own large language model there. They've made investments in Anthropic, which has the Claude large language model. But this is all about retail in the last 2 days. Do you find that interesting? Because over the last couple of years, we've talked about how when you're investing in Amazon, you're basically getting North American retail for free. That's changed a little bit.
And I think you throw the Rivian, their stake in Rivian, and that contributed to yesterday's gains. No, I mean, listen, Amazon is actually a reasonable stock if you think about it.
Well,
so
versus
I mean,
Walmart, I'd much rather be in Amazon when you think about all the different levers.
Fair enough. And listen, that might be the only problem with Amazon seemingly is that if there is a problem, I mean, they seemingly pick and choose when they want to sort of turn on the margin switch and turn it off. So you never know. Out of the blue, sometimes they have these funky quarters where you see some pretty interesting downdrafts. So I think Amazon is one of those things, like, buy it at your own. I think just buyer beware at these levels for sure, because they could pull a fast one on you at any time.
All right, let's go to Nike. You teased it in the rundown a little bit. They report after the close, 7% implied move in either direction. You referenced the fact that we were looking at Nike. This was about a month ago, and stock was like 91, 92, I think, ish. We looked at a call calendar. In that one, it was the 95 strike level, selling a short dated June and buying the longer dated, July, which was going to catch earnings. And, here we are, the stock is, just below 95. That worked out pretty well. Thoughts here, Guy, and this also comes on a day where, the Wall Street Journal had a very interesting read this morning, how Nike missed the boom and running culture. And they're talking about some of these other sort of startups or upstarts. That would be the Hoka and some of these other brands. So that's kind of interesting to me because Nike, I'm a diehard Nike guy.
Oh, yeah.
I'll never change. I'm never going to wear a pair of Hokas or anything like that. I just bought a pair of the Nike Air Max. They're Flyknits, and they're really fly, as the kids would say. They're great sneakers. And obviously,
you going like you playing on down at the West 4th Street
but obviously
courts?
I work out a lot. You know what I mean? You can just tell that. And so I'm just down with Nike.
You know what upsets me? And I know we got to get out of here.
Yeah.
This is very upsetting to me. And listen, it's a generational thing. I get it. And you see it more and more often. Men in suits with sneakers on.
I would never. No, they're wearing like high end, like
No.
like Italian.
No,
Yeah, they're wearing
no.
Lanvin, or they're wearing like
They're
wearing
sneakers. Okay. No, I'm just saying.
Well, they're $450.
I don't care how much they cost. They look like sneakers.
Okay.
I mean, put a pair of dress shoes on. Is that too much to ask?
No. Can I tell you why?
I don't want to hear about comfort.
Hold on
I don't want to hear
a second.
about
A
comfort.
long time ago, I moved away from the leather sole, and I'll tell you why. They're really uncomfortable on your feet. They're very slippery onto lots of different surfaces. And I started wearing Tod's, which is Italian. They're beautiful rubber sole. Once I did that about 20 years ago,
Tod's were made for driving.
I
driving
never
shoes.
went back. So I wear Common Projects. Those are, as you would call them, sneakers. They're very nice. And that's what the people are wearing. And they're wearing these Lanvin, which is French. And I like those too. I used to wear those.
We're off the topic, but I mean, you see what I wear. I mean, I wear my
Tory Burches, we call them. Melissa Lee calls them. They're the Gucci ones. Those have rubber soles.
No,
yeah, they do.
Some of them do.
Yeah.
I have other shoes with leather soles.
I know, because you're old school.
Do
you wear those? What are the shoes that have like the little goofy stuff in the front? They're like they look like lace, but it's leather. What do they call those shoes? Yeah, you do. You used to wear them in the 80s. I guarantee you.
I honestly don't know I really don't know.
All right.
I wear lace up.
Let's go back to Nike for a second.
Quick.
And I'll tell you.
All right. So real quick, as you're looking, I'm going to say this. Last quarter when Nike reported, again, sales growth of like flat, they were in an inventory drawdown of about 11, I think it was 12% or so, which suggests to me that margins might actually beat this quarter. They still face competition. They have a China. All those things have not gone away. But if you get a margin beat this quarter, this stock's going to go from 94.5 to 98. And I think that actually is the play.
Yeah. And again, we've seen this, like, I think it's interesting that Wall Street Journal, again, talks about kind of missing, a running culture. I mean, this is a company that was built on a running culture, right? In the 60s or late 50s and the like. So the stock actually poorly. Let's pull out a 5-year chart here. It's kind of hard to make an argument on valuation, Guy, on this one, but I think it really comes down to what expectations are. And you say to yourself, you do not want to see this thing break those last two levels.
No. Then things, because if it breaks those levels, they said a couple different things, like, same source sales or whatever metric they use is not good. They have an inventory build seemingly out of nowhere, competition coming, margins weren't great. Those things do not augur particularly well with stock that is cheaper than it's been historically, but still expensive.
Yeah, no doubt about it. Is this one that you want to step in front of a little bit? I mean, I would do it with the calls.
I would listen.
That's the way we kind of traded.
I'll say it, and if I'm wrong, well, tomorrow's Friday. On Monday, well, I won't be here Monday, so I don't have anything to lose. But I'll say this, like, yeah, I think you could play for a beat to the upside, seemingly out of nowhere. I can see us on Fast Money tonight saying, their margins were better. Stocks trade 98.5 to 99. Mel says, what do you do with it here? Like, I can visualize the whole conversation.
And what do you do with it there?
I'm not sure. We'll talk about it at the time. We have one question before we get out of here, because we promised we're going to be on the screws in terms of time. This is for you, Dan. From Matrix of Compassion, who's here all the time, do you sometimes add to your options winners? If so, what is your strategy to add to those
That's
winners?
A great question. And so we talk about this a lot. Let's just say you're long the 95 call in Nike into the print. And you were just saying if the stock's 97, 98, well, at that point, you could look to, if it's like in the money, to roll up and out is what we call it, right? So if it was trading at $97, that 95 call, let's say, appreciates, a buck or two, because it's going to be trading like stock, especially if it's a pretty short dated call. Then the idea, if you think there's going to be continued upside, you would basically do a roll. You would sell that 95 call and you look to take the premium and use a portion of it to buy, let's say, the July or the August 100 strike call or something like that. The other thing you call in the same expiration, turn it into a call spread, take in some premium, reduce the kind of premium at risk. That's another way that you could also do it.
Well,
all right, they're called wingtips. Wingtip shoes. Maybe Jacob can get a picture of the wingtips.
Are. I know exactly what they are.
Did you used to wear those in the 80s?
Of course I did.
And did you put rubbers on them?
Excuse me?
There's the thing.
That's a very personal question.
When it would rain or in the winter when there was snow, men used to put these basically rubber things over them. They call them rubbers.
Yeah, no, I never did.
Didn't they call them rubbers?
Yeah, they did. There's a great line in Rocky. They asked Rocky if he wants to invest in condominiums.
Rocky 1 or 2.
I believe it's the second one because he's made a little money.
Because you know why? In Rocky 2, they carry it forward from the end of Rocky 1 when he was in that amazing fight with who? Apollo Creed. Okay. And it opens up and the two of
They're in
them
a hospital.
they are in wheelchairs
Yeah.
because they beat the crap out of each other. And then that is a Rocky 2. Like you could make the argument about The Godfather, that Godfather 2 might be better than Godfather 1, and they're both brilliant movies. You could make the argument that
Two's better than one.
Yeah, you could.
I'll say this, and his response to the condominiums was something to the effect of, "I'm Catholic, I don't use them."
That's
He thought
amazing. He was like
condoms,
such a. The one thing that's inconsistent from Rocky 2 to Rocky 3 is because he becomes so sophisticated in Rocky.
Well,
3.
you know,
and that's one of the reasons his wife, you know, was a little disillusioned with his behavior because he bought a mansion,
living the good life.
Yeah,
Talia Shire.
Okay,
we promised to be out here 1:30. It's 1:31. Real quick, Market Matrix, throw it up. You talked about it, but subscribe.
People ask all the time how they can help us. We're trying
us.
to make this a thing. Go to the podcast stores, follow it. It's MRKT Call. Rate it, review it, share it with your friends. Guys, this is not a heavy lift. Under 10 minutes, you get the stories that Guy and myself and our team think are the most important things of the day. Brunson gets to read it. You don't have to listen to our voices. Okay, so go check out Market Matrix.
That's worth it right there.
Yeah.
Mike Wilson on the On the Tape podcast. Danny Moses, Nathan, Guy Adami. Mike Wilson, there you go. Leaning In. That's released tomorrow.
Yeah. AM.
Thanks,
right,
folks. We'll see you later.
Bye.